Hey guys, Rajiv here from Financial Hub India. So today we have not covered two more sessions here. That is like I think we have covered sessions for 20 till 25th, but we have not covered the sessions for 26th and 27th, right? So just let me go through the 25th and 26th session today once. No, you have covered 25th as well, I think. No, I think we have not covered 25th as well. Yeah. So, okay, so just let me go through the 25th sessions. Okay, so this was the chart setup where we have been moving in a non-volatile kind of a structure over here, and this is the first time here you see the price getting volatile. Okay, and then price again goes back up, trying to break the previous higher high, but it stopped right over there. So even though it's a minor support we have, but in terms of the order flow thing happening here, after such moves of non-volatile momentum, when you have a volatile momentum like this, so what do you understand? You understand that the sellers have attacked the market for the first time right after a long momentum from here to here. All right, and the buyers overtaken that momentum towards upside, but again the sellers coming in back in here. So somehow we can see that the fight between the buyers and sellers are really taking place around this layer here. All right, so this is a key layer for us in that case, even though it's a minor support. So note this point: even though something is minor support, it doesn't mean that we are not going to trade that. If that minor support is in line with the order flows, we are supposed to trade that. What order flows? When that minor support becomes something major, that minor support itself becomes something important because of in the existing order flow, then we are supposed to trade that particular minor support here. So we were planning to buy it here, but I think the price didn't come down over there, or what? Yeah, so it was not over there, so the trade didn't initiate over there. So just let me. Okay, you won't see the chart because the expiry is over. Let's go to the next day. Okay. No, sorry. It was a trigger here. Next day. This is the same support we have been talking about, I guess. And this was the price coming back here, and LOC buy entry could be initiated here. Okay, but again we didn't. I mean, in these scenarios, we are not supposed to carry a long position, because when we see the price has closed near to the key level, then we are not supposed to carry a long position. Okay, so this is one more important thing for you guys that you need to understand. Whenever our 80% trades are intraday, right? But 80%, 10 to 20% trades are positional only. So how we're doing is that when we see uh, when we buy something on a key level, and once the price moves up for some bit, it creates some distance from the key level itself. Then we have a space, like let's say our target is this one, for example, and the price closed in here. So we could have gone for a positional carry trade. We could have we could have left this position for the next day market. But today we can't do that. We can't do that because, well, if the market closes here and next day market gives you a gap down, then the gap down range won't be much higher or lower. The gap down range will be mostly around the key level here, back again here. You know, But if you buy it here, and if you buy the key level here, and we hold the position for the next day, and there is a gap down, then it will be directly opening up below the key level. There is a higher chance for that. All right. So, like, I'll give you one example. What we have been. I mean, today's date is 30th of July. So if you see this one, today's trade, we carried this position. We had a buy trade in this ship breaker, which is now running. So we bought this in here in terms of ship breakout, breakout, pullback, and continuation. We triggered this entry here, as well as breakout and pullback. LOC entry is also triggered in here, right? And finally, market closed in here. So there is a huge distance from the key level where we bought it and where the market closes. So we can handle the gap up, not gap up. We can handle the gap downs in any way. Okay, we'll be still in money if it opens up with a gap down. But if it would have closed around this key level, then I wouldn't have carried this position. You got it? So I see many people are still in confusion about this topic, because the only reason is, they are not checking out these trade recordings on a daily basis, so they are missing things. And I have found admins even in our stock channel. The admins are also confused in this topic. They don't feel confident to carry their positions, and they don't know really how we do it. And just because you are an admin, it doesn't. Just because you got the respect of an admin, it doesn't mean that you stop watching the videos or the recordings, because that's the point where you stop your growth. And the moment I feel like, okay, this man's growth is now stopped, and there is nothing new to learn for him from the FHI, from the Financial Hub India, then that's the point really. I take the decision that, okay, I don't need him as an admin, and as well as I don't need him as a gold trader anymore. And that's the only reason. That's the only reason why I say that your skill set. I don't know. I mean, how many of you have gone through all the sessions? I always believe that your skill set on price action doesn't matter for me. For me, what matters is your consistency, your discipline, and how serious you are about price action trading, and how dedicated you are towards the core concepts of things we do in FHI. That's more important for me, because your skill set is a byproduct of all these things. So I don't care what kind of skill set you have. You may be higher than me. You may be higher than. I mean, you should be. I'll be the one who will be the happiest person on the earth when I see that, okay, you're doing greater than me. I mean, that's my success. But when that crosses the limit, that crosses the base, the basic boundaries, then that's a problem. That's a problem. So anyhow, this is a message for the admins as well. Being admins of the channel, you have a, just a minute. Being an being an admin, you are the first one. You will have to be the first one to take things seriously here, and then the members comes in, because you are being followed, and the members are not being followed by anyone, but you guys are being followed, and you guys are given some particular power. So anyhow, try to understand the depth of the power, basically. Anyhow, now coming back to our topic here, this one. So overall price goes up, and then price tries to break the previous high, and then it failed to break that, then coming back down, taking support from here, and then going up, and again, what's happening really, it again stopped on the previous higher high. So somehow what we can see is that every time price is breaking the previous higher high, it really bouncing back to the base again, here breaking the previous higher high, coming back to the, I mean, there is a false break, isn't it? So somehow that shows that, okay, the buyers are not really gaining much strength, or some accumulation process are going on in the inside this overall channel with some volatility. Then eventually we got this structure here, key level structure. So anyhow, we have this support level. So the next good entry for a buy would be this support area, so we were trying to trade a breakdown below this support level, so that was the next trade on next day. And here we got the breakdown pullback. It's not a ship, we can't say, because if you go for a ship, I think the stop loss and the entry will be a bit higher, and the price made a good distance from the key level as well. So we initiated a LOC sell entry here. So a breakdown, and then on pullback we sold it on an LOC direct sell, and then we were targeting this level of support, which eventually failed. You know, yeah. So that trade eventually failed. There was some momentum towards downside up to this level, I guess, and then it bounced back up. Okay, so that was an LOC sell entry, the last trade, and then this is the trade which is going on right now. And in this trade, I already spoke about this trade in the last session as well. Okay, so let me talk about this trade as right now. So now what's going on is that the price really, this gap up, you see the price opened up directly above the all-time high. So price opens up directly above the all-time high, then it's going with a non-volatile momentum, and then you see the first sign of volatility. First time the sellers coming in back inside the market, all right, and then price pushing back up again, stopping on that layer, the previous layer. So it shows that, okay, this was in any way on the first attempt, you can see that this is a layer of the seller, or because this is the point where the sellers really attacked for the first time in the market, then pushing back up, these sellers coming back inside this market here, again going back up, again the sellers coming back in. So somehow you are forming what, a triangle breakout structure. So eventually price goes back up. We have been tracking this key layer of resistance, then this is breakout, pullback and continuation. BPC could be triggered, as well as with the BPC, LOC is also triggered in here. This is in a higher time frame, it will be looking much better. This is I mean, once you see the price is really the price has really spent so much time above this layer here, even though it was a bit zigzagging, but the price is still trading above this key layer. And then on a pullback, LOC direct entry can go ahead with this. And what would be the target? The target would not be this one, since we are trading on an all-time high layer. So our target will be preferably, our target should be based on a higher high, higher low swing. It can be in 1 minute, it can be in 3 minutes, but preferably, since you are trading in a all-time high layer, then I would prefer to go ahead with 1 minute, and not 1 minute, basically 3 minute time frame is a better time frame to go ahead with a higher low formations, because 1 minute will be a bit faster. I mean, when we are supposed to follow 1 minute, when the momentum is not much zigzagging like this is not a one-way momentum up. There was some volatility in it, right? So to handle these kind of situations, it's always better to go ahead with a bit higher time frame. But when it's like zoop 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 one way towards upside momentum, then it's better to go ahead with 1 minute time frame, stop loss trailing. Okay, so here the stop loss was being trailed with higher high, higher low, higher low, higher low, higher low, higher low, higher low. So right now we are in here. So today morning after market opening, this was our next update. We have trailed our stop loss now below this key layer. Now it's not about higher high, higher low. Now from first of all, we have been trailing our stop loss based on higher high, based on higher lows, but now we are trailing based on key layer here below this. Now the reason of switching below key layer is that because we are seeing volatility coming inside the market. So far, if you see the price action is structured over here, do you see how the structure is changing in it? I mean, so far the longest momentum you see where, maybe from here, after a break of this much is the longest momentum after a break of the last higher high. But do you see such momentum, a break of last higher high from here to here? This is an exhaustive momentum, exhaustion. When something is moving up, up, up. Wait a minute. Just let me open the Epic Pen, then we'll talk about this more. Wait. Sorry. Okay. I think on the last session also I discussed about this in brief, so you can go through that one as well. Now, this is an example of change of trend structure. Change of trend, not change of trend. It's an example of change of structure. You know, change of structure in the sense the whatever happened in this up move from here to here, something different is happening from here to here. Forget about all these things. Forget about this. Here to here. What is the difference? The momentum, the size of the momentum, one-way momentum, which never happened in this process. Here, the price was somehow squeezing and moving up. No, and when this thing happens, we already talked about this for a few more lessons, right? So when this thing happens, we say this is an exhaustion. When something is going this, and suddenly you see a momentum like this is an exhaustive momentum, and this is a kind of change of a structure overall in the market happening around, because change of a structure, because the structure changed from this momentum to this momentum now somehow. All right, so whenever you see there's a change of a structure, there is a possibility that okay, there is a change of momentum as well. There is a change of momentum. So whenever you see change of a structure like this, it means what? The volatility is really increasing.